Inflation data received so far for October and November show a welcome reduction in the monthly pace of price increases. But it will take substantially more evidence to give confidence that inflation is on a sustained downward path.
So, welcome today. This is Financial Stockholm. I'm Christopher Crystal. This is Thursday, December 15th, and these are the events that we're seeing in Sweden and what the news is, and our reflections on it. Of course, this is not investment advice, and you should always consult your investment professional for that advice in the market. The primary principle for us is to tell you what we see, and remember, you can always make money in the market, whether you're long or short, or whether you're shorting or going long, in terms of the idea time frame. If you're a short-term idea or a long-term idea, you can always make money. So remembering to subscribe and to like is great, and we'll remind you again at the end. But so what we're seeing in Sweden today is a focus on viruses. So there's this idea that the healthcare system is going to collapse because more people are getting this virus that's going around, and whether it's going to be identified as the COVID or if it's the RS, the rhinovirus, where they're going back and forth, and this is in line with the idea that perhaps people are going to be locked down again around the world. So it's a question, but it's a non-event. Because we didn't lock down before. And while on the later dosages of vaccination, there's less and less interest there. The majority of the population did get the first 2 jabs. It does not look like we would be locking down unless something were to change dramatically. What we also see in Sweden is the idea that our inflation was announced yesterday as being slightly lower. And while the markets went up on this idea, the concept in general, this is really kind of a false rally, and it creates an opportunity where you can sell short. And because if you look at what the household cost here in Sweden is for food, it's dramatically increased, where you're seeing over 18% on a lot of food goods in inflation. And so you have an average household of 4, where previously they could get by on, say, something like 4,000 Swedish crowns a month, are now having to pay anywhere from 12 to 20,000 if they're able to maintain what their previous level of standards were. That means for the average consumer, they have to be pulling in over 20,000 in income to pay for a 12,000 a month food bill. So if you have a 2-family household or 2-earner household, they have to be pulling in over 100,000 Swedish, over 10,000 Swedish kroner, or 100,000 Swedish kroner per month, because our tax levels would put them over the 40%. So they need to be making anywhere from 80 to 100,000 to be able to pay their mortgage level, to be able to pay for their electricity cost, and to be able to pay for their food cost. And the average income in Sweden is below those levels. So how the Swedish consumer will survive this winter is as of yet unknown. I don't have the savings level for you, but it is going to be a very, very tough year. You see people having double the usual cost for their electricity bill, their power bill. You see them having multiple level increase of their food bill. And then you have the multiple level increase in percentage cost for what their gas prices are. So overall, the Swedish consumer is getting hit across the board on the interest rates and on the food rates and on the power rates. So the rally you see where people say, oh, we only had 7.5%, that's kind of like, well, it's not that bad. It's not as bad as it was. But think about this. If you can't swim and you're in 100-meter deep water and you were in 200-meter deep water, does it really matter? You're still in deep water, and if you can't swim, you're going to sink. So the idea that 11.5 or 11.5 or 7.5 or anything above 2% inflation is okay is really wishful thinking. And what's going to happen is, you saw in the US, the Fed raised the rates by 50 basis points. It looks likely that the Swedish rates will also continue to go up in January. And what we're experiencing is a global economy that is slowing down. So when the OPEC nations are dropping their production by 2 million a day, that is a dramatic decrease, and that's based on global GDP. You have the Chinese shipping rate slow down, you have the Chinese manufacturing rate slow down, you have the European growth slowing, you have the US growth slowing. You have the widening of the money pool, which is why we need to contract it and increase the rates to draw it in, because otherwise the value to purchase items is dramatically lessened. So you have a scenario where otherwise you'll get hyperinflation, or you could run into stagflation and then hyperinflation, because as the global economy continues to consolidate, you will also see that you need to have a rebound reaction. If you have not resolved your logistics issues, you will continue to have a jammed up artificial inflation. And that'll be because goods are not able to get to the stores in time. So you'll have less goods reaching counters and increased demand for those specific goods. So then you'll see the items, even on the white goods or like refrigerators and washing machines, increasing in price because not enough are getting to the market. And then when you free up the logistics issues, then you can see them getting back to the market and you'll see a hyperinflation. So the issue here is you need to correct the logistic flaws that have not been corrected, and you need to do this before you have the recovery of the economy. And what's going to happen probably in the next 6 to 12 months, in my opinion, is you will see a new currency introduced to the market, and this will be the BRICS plus or OPEC plus currency. This commodity currency, and that's why I call it a commodity currency, will be a move away from fiat and back to an asset-backed economy and back to an asset-backed currency. You will have the BRICS nations and the OPEC plus creating currency that will be based on commodities. So the US, which was a petrodollar, so loosely attached, it is a fiat, but loosely attached to the petrol. The Chinese economy currently attached to the real estate value and the intellectual property value in China. Then you would have the BRICS plus, OPEC plus, and that would include China, having a commodity-based product. So you would have all the minerals for the batteries, you would have the elements there as well, you would have the petrols, which are not going away, and you would even have the minerals attached to the nuclear, like the uranium. These will create the basis for what I believe will be the next economy or the next currency used in future economies. So right now, what we're looking at is potentially a close to the US Fed rate of around 6% by April of next year. And we're looking at the European rates going up at least another 50 to 75 basis points, in my opinion. And if we do not get out of the issue of the logistics trap for the inflation, we will see a worsened economy. And we need to see a increase in what we're doing for the infrastructure in terms of our electrical power grids. So again, I have a kind of bad news, continued negative outlook, because we see although we saw a drop in inflation, we don't see a fix in the pricing. We don't see a fix in the issues. You're looking at showers in Sweden costing close to $5 for a 3-minute to 5-minute shower. These are being highlighted in the press. You're seeing the food cost is increasing. You're seeing the energy cost is increasing. You're seeing alternative ways to heat your household or power your household are doubling. So we're looking at some very, very negative news. And then what we're also seeing is, of course, to mix in, we're seeing extreme politics play a hand in how things will develop. So, you know, the question of what's a hate crime, saying men are men, and saying that, you know, whether a saint is a male or a female and should lead a procession when it was based on a pagan ritual from Freya, our goddess of light and the feeder of the gods with the golden apples. It makes no difference. But if that's what people are going to get lost in the weeds, they're going to miss it, and then we're going to wind up in real problems. So right now in Europe, we're looking at significant issues that are real, and we're focused on non-real issues, and we're focused on issues and ways to kind of regulate our way out. So the EU Commission We have this lady by the name of Ava Kali, who received something like 600,000 euros from Qatar. She, of course, denies all of this. And we're looking at proposing a digital euro here in Europe. And her husband and she created a blockchain company to investigate blockchain, which we all know, in my opinion, is the best way to go when you're looking at digital currencies. You want to have the blockchain solution. So Europe continues to present itself as a troubled economy. And I would say look at more shorts than you can look at for positives. And as far as the US goes, they've got their issues as well. We're not far behind on what they're doing. But you can always make money in the market. And it's a question of whether you're short, whether you're long, whether you're long-term strategy or short-term strategy. So remember to like and continue to subscribe. And you can find all of our information on Substack, and we'll wish you a great day. Thank you very much.